Alrighty, what are the rates? What are the requirements for a loan? These are the two most asked questions I get every single day, at least Monday through Friday. Not always on the weekend, but often on the weekend as well. Hello everyone, my name is Rodney. As many of you may already know, but what very few know out there, at least in the virtual world, is that my friends and family actually call me by my middle name, Wayne. So if you ever reach out to me with questions and you call me Wayne, that's fine. I'll know you've seen this video, but Rodney is of course fine too. Anyway, it has been a while since I've done this, and some things have changed over the last month or two, so I wanted to discuss some updates to what myself and my partners are able to do for all my hardworking contractor friends out there, which is the majority of my business, but there's other business owners, also the owners of private medical practices, urgent care centers, dental practices, orthodontic practices, etc. And no matter what business you're in, if you're a person who does not want the growth of your company to be restricted by lack of access to capital, then hopefully you'll find this very informative. And of course, I want to discuss the answers to those two most asked questions I mentioned at the beginning. What are the rates? What are the qualifications? Anyway, as far as access to capital is concerned, maybe you need it now, or maybe you don't. And you're not sure if you ever even will. But as you must realize, there are any number of situations that can come up, sometimes out of the blue. And if you have relationships established with the right people, you can put yourself and your business and your employees, if you have them, in a position where if one of those unexpected situations arise, because you all know things can change on a dime these days, i.e. coronavirus, lumber prices, changing government administrations, policies, interest rates, infrastructure attacks from hackers in Russia, who knows what else is on the horizon. But if those things occur, that hopefully you will have the right relationships established beforehand, so that your company has the access to capital it needs to weather whatever storm might come up. That said, access to capital is not a concern for some business owners and many people. If your business is taking care of your needs and you're happy and content with the way things are, and you're not interested in the stress that comes with growth, you're not interested in becoming a multi-million-dollar company or whatever the case might be, and I totally respect that. In fact, you're probably the happiest people in the world. Those that are content with a simple life. They know how to enjoy simple pleasures. They're taken care of. Their family's taken care of. They have the things that they need. And that's probably the best way to live. However, there are the other type of person out there. Those who do have a lot of ambition. They want to see their company grow from maybe a six-figure company to seven-figure, eight-figure, nine-figure, a $1 million company, $10 million company, $100 million company plus a year. And if your business has unrestricted access to capital whenever it needs it, you can get there much faster and grow much more consistently from month to month and from year to year, unrestricted by lack of access to capital, with the financial flexibility and agility to deal with our constantly changing world. Now, with all that in mind, I want to cover what I basically cover each day when I get on a consultation call with someone. Let me set this up. I get an instant message on Facebook, or an email, or a text message. I might be in my car, I might be in my office, I might be out on the couch, and it often says the same thing. What are your rates for a loan? Or could be, what are the qualifications for a loan? Sounds like simple questions, right? And when I reply, well, that depends. Do you have a few minutes to jump on a call today? Some people get irritated. They're like, why do we have to get on a call? Just answer the question. Which I will then try to do my best to do, but sometimes can be challenging when I'm sitting there with my phone trying to type it out in an instant message or a text. So let's discuss that. Here's the thing. Everyone's situations are different. There are so many variables that affect the rates and terms. It's not as simple as providing a best and worst case rate and term scenario, because neither of those scenarios may apply at all to the person who's asking me the question. For example, how long have you been in business? What is the business doing in gross sales monthly and annually? What kind of business entity are you using? Sole proprietor, LLC, S Corp, partnership, etc. What is the type of business? How soon do you need the money? Do you have real estate that can be used to secure a loan because the rates are much better and the terms longer if you do? Where is your credit score at? Because that has a direct bearing on where we try to get you money and what the rates and terms will be, or what is the money for. Have you ever had a bankruptcy, or do you have tax liens? It doesn't mean you can't get approved, but it might affect who we shop that loan to. Is it working capital loan you need, or is it equipment financing? Two completely different sets of options if it's one or the other. Do you need the money to open another location? Is it for a shop or a house or an office? Is it for a fix and flip or a buy and hold real estate investment? Is it for a personal home for your family? Is it for a commercial real estate project? Do you need a construction loan? All of these different scenarios require different loan products and different lenders with vastly different rates and terms and qualifications and documentation. So please do not be offended when I reply to that question, and we need to get on a call so I can ask you some questions as well as answer your questions. Here's the other thing I want to acknowledge. As in many businesses, but seems to particularly be true for this one, for the lending business, there are some real knucklehead shysters in the lending industry. Now, admittedly, I can be a knucklehead, but I'm not a shyster. I'm not one of those guys. And I will not lie to you and make all kinds of promises to you to get you into a loan contract. That's what they do, to get you into a loan contract that makes them the most money, but may not be the right product for you at all. And they are very good at convincing you that they are your best and or only option. But when you and I get on the phone, I want you to feel confident that you are not going to have to worry about that. I have calls with business owners every single day, and the vast majority of them never end up becoming a client, at least not that day or that month, maybe later. Why? Because I'm just here to answer your questions, whether you can currently qualify for any kind of funding or not. I'm here for you to pick my brain. Do I know everything? By no means, but can I usually find an answer for you? If you ask me something I don't know, yes, usually. It's just the nature of the business I'm in, and I accept that. I'm going to be talking to people and answering questions daily for multiple people. It's what I do. It's part of the business. So please do not be shy or hesitant to reach out, text, or email, or give me a call, or go on my website and schedule a consultation. There is a reason why I call my website Zero Stress Funding, even though zero stress funding is literally pretty much impossible. But there's always some stress involved in any lending situation. But I always try to keep it to a minimum, and I always try to make sure that dealing with and interacting with me is not one of those stress points. But what I will never do is just try to tell you what you want to hear. In my own calls, I ask you some questions to find out exactly what your situation is, what your funding need is, if any. I answer your questions. Usually by the end of that call, you'll have an idea of a possible path forward if there is one. Maybe there's not right now, and you just have to wait a little while, and then there will be. And then I'm going to tell you goodbye, and I'm going to leave you to decide in your own time frame, and with no pressure from me on what you want to do, because only you fully understand your particular situation and can make that decision. I'm not going to be calling, texting, and emailing you after that, trying to convince you to take a loan or to just harass you. I leave it in your hands. Depending on how our conversation went, or if you had me send you some information, I might follow up to make sure you got it. I may check in down the road to see how things are going for you, but there's usually something we discussed that necessitated that follow-up. And I'm never going to share your phone or email with anyone else or try to sell you anything at some future date, unsolicited from you, unless you reach out to me. Okay, so let's talk about my new situation that I mentioned earlier. When I got into this business less than a year ago, I was trying to find a new way to keep a roof over my family's head because the coronavirus had forced me to do so. And I got hooked up with this company offering one product and one product only: high-interest, unsecured working capital loans that were based on your business's monthly gross income and a forecast of your future accounts receivables, or money that you had supposedly coming in. I still have contractors and business owners getting those loans from me every month. For many of you, that type of loan would make no sense, but then for others, they can be a useful tool. Again, it is all based on your situation. Everyone's situation is different. For example, let's take a worst-case scenario. Unsecured working capital loans, which are basically a hybridized merchant cash advance, use a factor rate of interest. What's a factor rate? Well, you're probably used to an annual percentage rate, or APR, like on your car or your house. So if it's a 30-year loan on your mortgage, you bought a cheap house for $100,000 at 5% just for easy math. Over 30 years, you're paying a 5% annual percentage rate per year on that money. That's what most people are used to. And at the end of that 30 years, you've paid back about $96,000 to $97,000 in interest at 5%. So if you considered that at simple interest, it would seem almost like a 200% loan, right? Like 1.96 times what you borrowed, or 1.97. But they don't call it 200%, they call it 5% annual percentage rate. So it could be a little misleading in a way. A factor rate is just simple interest. So that means if you take the amount that you borrowed and you multiply it times the factor rate, you see how much you're paying back. For example, if you borrow $10,000 at a factor rate of 1.25, that means you're paying back $12,500, or the $10,000 that you originally borrowed plus another $2,500 in interest. That's that 0.25 part. And most of the time, a unsecured working capital loan, they start at about 1.25, and at the best case scenario, worst case scenario, they go up to 1.5 times what you borrowed. So that same $10,000 in the worst case scenario would be paying back $15,000. That may not seem so bad at the $10,000 level, especially if you have a way to turn that $10,000 into $20,000 or $30,000 or more. Everything is relative. Yeah, you paid pretty high interest on the money, but you use the money to make back that principal, pay the $2,500 to $5,000 in interest, and then put a bunch of profits in your pocket that you could not otherwise have made if you had not taken the funding. And for whatever situation, in your situation, cheaper money was not available. It is kind of a pay-to-play situation, a return on investment situation. If the return on your investment is high enough, who cares about the interest? Yeah, you could have made more money if you didn't have to pay that interest, but the option was not available, which left you with the two choices. Either take the loan and use it to make the money you couldn't make without the money and take the profits, or not take the loan and make no profits. In the end, you are richer than when you started if you do take the loan, and less of something is a lot better than a whole lot of nothing. So also to keep in mind is once you do this once, you can keep repeating it on a larger and larger scale. But the great news is only the first contract is that expensive. Once you do this once, with us at least, make your payments on time, complete the contract with no issues, all kinds of other doors start opening up. The next contract will be cheaper, a longer term if you want it, higher approval amounts, secured loan options might open up, SBA loans might become an option. We can work on your credit if needed. Fold those unsecured loans into a secured loan down the road, get you a credit line. You see, that first expensive contract is just the beginning. But remember, we were just talking about the worst case scenario. I'm just getting going. Okay, now remember, I started with the one company who just did the one kind of loan, but that's no longer the case. I was a roofing contractor when I was in my 20s and early 30s. It's a business I still understand, even though later I became a chef and worked for seasonal resorts and restaurants all over the country, from Alaska to Florida, even on cruise ships. Although that career was pretty much ended by coronavirus. And the fact that I also got married and had a new baby, my first and last, at the age of almost 50. So that kind of facilitated my shift into this new world of business funding and lending. However, when I started with that first unsecured working capital loan business funding company, I gravitated towards contractors because even though restaurants and resorts needed money, those loans were based on their monthly revenue for the last 6 months prior to them applying for that loan, and since many of them hadn't been making any money, there was no money there to loan them. But I then fell back on the fact that I knew the contracting business. So I started talking to a lot of contractors. That's who I gravitated towards. And because I was talking to contractors on a daily basis, I would inevitably get asked questions about other kinds of loans and financing. At first, I remember someone asked me if I could do an equipment loan. I said, no, but maybe I can find someone who can. So I found an equipment lender. Then later, somebody called me saying they wanted to do a fix and flip real estate project and if I could help them. Well, I couldn't. So I started looking for an option for that. And through a chain of events that's too long of a story to go into, I ended up getting connected with the best combination private lender, mortgage lender, construction lender, business capital lender, / all things real estate, both residential and commercial lender in the entire country. And so if that's something you're interested in, we can talk about that later. Then another shift in my business occurred. I was still taking a lot of unsecured working capital loan applications with my initial company, the company that got me started, with whom I still work. But only about 1 in 4 of those applications that I was submitting were getting approved. So what was I going to do with all these declined applications? Were those people just dead in the water? They had no other option available to them at that stage in their business. So then one day, from talking and networking, someone recommended a potential broker partner, even though in the beginning I wasn't even thinking of him in regards to my declined application. But this person had been in the business for about 10 years, started much like me, offering just one product from one company as an employee, but he was very talented at the business, and very smart. Over the years, he's established agreements with all types of lenders. He can do unsecured loans, secured loans, real estate, SBA, even has lenders in Canada, which I was happy to hear because I had to turn down a lot of business prior to this from contractors in Canada that were calling me from time to time, having seen my ads. And initially, I just wanted to use them as an alternate equipment lending option because I wasn't very happy with my first equipment lender. I really was not aware of all that he was able to do. And then I became aware that he also did working capital loans. And one day I had the bright idea to ask one of my applicants that had been declined by my first company for a working capital loan if that person wanted me to try and submit their application with my new connection, see if we could get an approval there. He said, sure. Couldn't hurt to try. No hard credit pull, so it doesn't hurt his credit. So there was nothing to lose. And guess what? We got an approval. So I was like, light bulb. Maybe now I can make a little money and help some of these business owners that got declined by my first lender get approved through my other guy. So now whenever I got a decline from the first lender, of course I would get permission first. I would take that person to my new connection. And guess what? Like 80% of the business owners declined by my first lender, my new friend was getting approvals for. Why? How? Well, because he has long-term relationships with a lot of lenders with many programs and different risk tolerance levels. Not just that. His business has become so successful that he can invest some of his own money into a deal if he chooses to do so. So imagine how much more influence he has with lenders with whom he's put thousands and thousands of dollars of his own money into deals with, and with whom he has brought a lot of business. So my previous company was a direct funder. There was one lender, one person, one group of underwriters making a decision, but within I can be connected with multiple different types of lenders with whom he has a lot of influence with. So that's why we can get approvals when I can't get approvals with my first company. So it was kind of a win-win. Now I can get approvals for my people that applied that got declined. They got the loan that they needed. I made a little extra money on loan that I wouldn't have made, so it was a win-win situation. However, if we do get an approval for someone who can't get approved anywhere else, if I get them approved with my second lender, that first deal might be a pretty expensive loan. And we are going to tell you not to take it unless you have a way to make money with that money pretty quickly. And we will have thoroughly reviewed your bank statements, and we're not going to approve you for a loan that's more than your business can afford, at least on paper. Sometimes you know things we don't. Maybe we think you can afford it, but you can't. That's things that you kind of have to determine. But once you get through that first contract, though, the floodgates are going to start to open for you for so many more options moving forward. He even has an in-house credit repair expert that can, in 2 to 3 months, usually get all or almost all negative items removed from your credit reports with all 3 bureaus, and that greatly increases your credit score, which in turn opens even more doors and more access to capital for your business moving forward. Imagine down the road having access to at any time, if you're not already in this situation, to $100,000 to $1 million or more at your fingertips whenever the business needs it, whenever you need it. Being in a situation where lack of access to capital is never a problem or never ever prevents you from taking advantage of some opportunity. Okay, back to that original question. What are the rates? Well, If you have less than 3 years in business and no real estate we can use as collateral for a loan, you are unfortunately pretty much forced into the unsecured working capital loan situation, at least initially. Those rates, as I mentioned before, usually start at a 1.25 factor rate, so 1.25 multiplied times what you borrow, and go up to the highest I've ever seen, a 1.55. I didn't facilitate that loan. I saw a loan that high from another company though. So $10,000, best case scenario, you're paying back $12,500. Worst case scenario, you're paying back $15,500. Bump that up to $100,000 though, and you can see where when you're paying back a loan in a year or less, although sometimes we can get 2 or 3 year options, but say it's a year or less, if you're paying back $100,000 plus another $50,000 or $25,000, $50,000, you can do the math and figure out that your payment is going to be pretty high. And unfortunately, on working capital loans, unsecured especially, in particular, it's usually a weekly payment or a daily payment. It's automatically ACH'd out of your account. That is why they look at your bank statement so closely, because they don't want to overdraw your account. That doesn't help them. It doesn't help you. If it doesn't help anybody. It's a lose-lose for everyone if that were to occur. So they like to make sure there's enough revenue there that those payments coming out are not going to mess you up, not going to mess up your business. Things that you need to do if you haven't already. Get a business account. It's much harder for us to get approvals for you if you're using your personal bank account. It's not always impossible, but it's much more difficult. It greatly restricts who we can take that loan to, and you're probably going to be paying even more expensive rate. Get a DBA or have a name for your business other than John Smith or whatever your name is. Try to, it's best if the business has some kind of business name and an EIN number or tax ID number, and that you deposit all the money for the business goes through the business account first. If you transfer to your personal account, your payroll or paying yourself, that's fine, but the business needs to be run through the business account. It'll be much easier for us to get you funding and capital down the road. As well, if you do get an unsecured working capital contract sent to you, you need to look at the contract offered you. So to figure out just to kind of give you an idea to figure out if it's worth it or not, if it's in the 1.25, which is that best case scenario, to 1.3 factor rate range, if you can take that money and at least double it after you paid your expenses and profits, and there's no way for you to use your own cash or get a cheaper loan product at that particular time, then it may be worth it to take that contract. But you kind of have to figure that out and crunch the numbers on your end. If the contract is between 1.31 and that worst case scenario 1.55 factor rate, then you probably want to at least be making 2.5 times what you borrowed to really make it worth it, in my opinion. You may feel differently. But certainly if you're doing more than 2.5, if you're tripling your money or quadrupling your money, then even at the super high rates, it's still worth it if that's money you couldn't make another way. Again, a whole lot of, a little bit of something is better than a whole lot of nothing. Sorry. I'm getting a drink of water here. The other thing that you must keep in mind is your future earning possibilities. If you always have capital available to pay suppliers, make payroll, cover all other expenses, and you're never restricted by a lack of access to capital, then you're available people to hire. Your personal and business credit will grow, as will your reputation and your word of mouth advertising and your online reviews. And this type of marketing and advertising, that word of mouth and reviews, is the most profitable form of advertising you can possibly have for your business. Many business owners forget to calculate this in when determining what the expense will be for them if they don't take the funding. Because if they don't take the funding, they're going to have less happy customers. Customers who had to wait for you to finish another job and get paid from them before you could start doing their job, or whatever the case might be. It's very difficult to determine the thousands or hundreds of thousands or even millions of dollars in lost future revenue that could be the result if you're operating in the beginning with a lack of access to capital, now, because it makes it much harder. You have a lot less happy people, happy customers that you're creating, happy clients, and therefore not as many reviews, therefore not as much confidence, etc., etc. You can see how the snowball effect would take place. So you got to think of that long-term money that can be lost as well when you're thinking about whether to take one of these contracts or not. But again, the main factor is that contract going to be able to make you enough money immediately to cover the cost of the loan and make you profits beyond that? The other day, I was commenting on a post in a Facebook group on a worst case scenario where someone took a $100,000 loan, they had to pay back $150,000. That was the worst case factor rate. But they were able to turn that $100,000 into $300,000. So they made the original principal of the loan back, the $100,000. They also made the interest, $50,000. And then they made another $150,000 above and beyond that without that first $100,000, they never would have made, at least not in that time frame. And someone, after reading that, they commented very angrily with a lot of profanity that nobody ever in any situation should ever pay 50% interest, which is, by the way, not an accurate description of the interest. We can keep that conversation for another time. But anyway, there's no situation ever that somebody should take that kind of loan, or anyone selling that loan is a loan shark and predatory and should be prosecuted. You get that blankety blank out of our group. Well, I agree that is very high interest. And if there's any way you can get a loan at less or get the money yourself, you should do it. But if you offer me $100,000, that's not my money, but I can take it and turn it into $300,000 that I couldn't do in any other way, I'll be happy to give you $50,000 in interest because I took that money and it enabled me to make $150,000 that I otherwise never would have made, at least not on that time frame. Everything is relative. In this scenario, it is way more expensive not to take the funding. I would do it once and I'd keep repeating it with higher and higher amounts, especially since after doing it that first time, paying that super high rate that first time, the money would cost me less and less each subsequent time, and I would get higher approval amounts each subsequent time. Yeah, my first contract was very expensive, but I made money, and each time after, I'm making more and more money, and the money I'm borrowing is getting cheaper and cheaper, but none of it would be happening now if I had not taken that first expensive contract then. But of course, you need a way to turn that money into more money. That's the predicating factor. If you don't have that, you would never take one of those kinds of loans. And there is the flip side. I absolutely do admit it. In fact, people call me and tell me that this has happened to them. I've heard the story many times. They take a loan, a high interest loan, or an MCA, or other type. They end up getting buried in debt, defaulting, they can't make the payments, getting their accounts overdrawn, their credit gets ruined, they take another one to try to cover the last one. It happens. It's not always their fault. Sometimes it is their fault. Sometimes it's a combination of factors. People make poor decisions, or something totally unexpected happens, or some shyster talks them into taking a loan they can't afford. They don't have a good way to use that money to make money at a high enough level. So if you get on a call with me and my partner, rest assured, we are going to do everything in our power to make sure you are moving forward with your eyes wide open, fully informed, so that you can make the right decision for your situation. Unfortunately, some will still make the wrong decision. Hopefully that does not happen to you. You should always be very careful when borrowing money, but even more so when you're borrowing short-term, high-interest money. Okay, so we get that first contract done. Now what? Now we have a relationship. You paid on time. You paid your loan off. Remember again that now the doors are opening up to more and more options for you. But no, not everyone has to go that route. Say your credit's great now. You've been in business for 3 years or longer. You and or your business owns real estate, or at least has good equity in real estate. Now we don't have to start from scratch, so to speak, in your case. Now you can get working capital for as little as 7 or 8% for traditional secured loans and 3 to 5% on SBA money. Do you want to buy a new home? We can get you 15 to 30 year fixed interest at current market rates, which are currently in the 2s and 3s with minimal fees. But you might reply, yeah, but I can get that from just going to my bank or mortgage guy. Why should I come to you? Well, good question. If you're a salaried employee, a W-2 employee, there may not be a good reason initially, at least on the surface, for you to come to us. There are other reasons which we can explain. We can talk about in more detail at another time. But the first big one is: are you self-employed? If you're self-employed, it's much harder to get approved for those market rates on fixed products with your traditional mortgage person or bank, because one of the biggest factors they use in getting you approved for that mortgage is your tax return. And if you own your own business, one of your biggest expenses can be taxes. And obviously you want to reduce that expense as much as possible so your business is as profitable as possible. So to do that, you take as many deductions as you can legally take. Some even move into the gray area, but we won't get into that. And anyway, that you may be showing that you're making on that tax return, that bottom line number appears to be much lower than in reality it may actually be. You may be using the business to pay for a work truck, but you're using that work truck for personal transportation as well. There are many things, but anyway, on the tax return, looks like you're not making very much money. Banks and traditional mortgage lenders, they don't take that into account. But my guys will take that tax return and we will factor out all those deductions, figure out a true picture of your income, and still get you approved for that 30-year fixed product at market rates that you can't get approved for at your bank or with your mortgage person, or at least many of them that you can't. So that's something to certainly keep in mind. In conclusion now, again, back to that question, what is the rate on your loans? Well, depends on the type of loan and in your particular situation. Worst case could be a 1.5 factor rate in a 6-month term. Best, or a whole other scenario, could be a 2.5% annual percentage rate on a 30-year term. In another area, or a truck, or it could be 25% or more, structured as a lease where you own the equipment at the end, because that's the only way we can get it done, because your credit and other situations pushed you into that subprime category, and unfortunately those jerk lenders like to take advantage of that. It is not just a question that we can answer without having a conversation, because again, there's just so many factors. So please go to my website, www.zerostressfunding.com, schedule a free zero stress, no pressure consultation so I can get your questions answered and we can get you moving forward. Maybe we have to start at the beginning with you with that very expensive first contract for unsecured working capital, or maybe your situation is much more evolved and we can start with something secured. Maybe we can get you a nice credit line or $80,000 in 0% credit cards if you haven't gone that route yet. Maybe we can facilitate the purchase of a new shop or office for your business. Maybe we can provide all the construction financing on your next real estate venture, commercial or residential. Maybe we can get you $100,000 to $500,000 in cheap long-term SBA money. Where you get your first 9 months of payments waived. Maybe we can get you a multi-million-dollar line of credit solely for purchasing distressed properties, rehabbing them, reselling them as many times as your business and crews can handle. Maybe you have a medical practice and need the newest equipment to compete and stay current and stay up to date. The point is, those questions, what are the rates, what are the terms, what are the qualifications, cannot really be answered until we've had a conversation, because again, you can see how wide the variety of different situations and answers we're going to get if we have a conversation. Does that make sense? I hope so. And when we do have that conversation, I'm not going to try to pressure you to do anything. My job is just to ask you questions and answer your questions, and then tell you what your options are based on that conversation. And then I'm going to leave it up to you to decide what you want to do. If you choose to go a direction that does not include me, no harm, no foul, and I'm happy I could help. I believe in karma. What goes around comes around, at least the karma concept. I know if I'm helping people, I'm going to be fine. Everybody's going to be okay in the end. If we do end up working together, my next job, though, is to make it as easy for you as possible with as little stress as possible, and hopefully no stress that's caused by me. So please call or text 442-222-9429 or go to zerostressfunding.com or email me at rodney@zerostressfunding.com or look me up on Facebook, whatever it takes. If you're watching this video on YouTube, there's a Calendly link down in the description below, as well as the website, etc. You can click that Calendly link. You can set up no pressure, zero stress free consultation with me at a time that's convenient for you. But you can just call or text me too, and we can go that route. Please don't be shy. I swear, I really am a nice guy. I believe in honesty and integrity, and I hope that I can be someone you can trust in this sometimes scary arena of the lending industry. Until next time, bye.